What if AI controlled the entire global economy? I know, it sounds like something straight out of science fiction, right? But it's a future that might be closer than we think. So today, we're going to dive into the incredible potential and maybe the hidden dangers of a world run by algorithms.
But hang on, let's bring this down to a personal level for a second. Forget the global markets, just think about this. What if you never had to make another financial decision for the rest of your life? Seriously, no more stressing about your budget, no more second-guessing your investments.
Just picture it, a dedicated AI working 24/7 just for you. It manages your budget with perfect foresight. It handles all your investments completely logically, without a hint of emotion, and it finds you the absolute best loans instantly. I mean, it's a world of total financial optimization. Sounds pretty great, right? Okay, so that's you. But what happens when this super efficient, perfectly rational system scales up? What if it's not just your finances, but the finances of every person, every company, the entire global economy being optimized? That's where things get really interesting.
So let's start at the micro level. We'll begin with you, and this idea of your own personal AI economist. Because honestly, this is the foundation for everything else that's about to follow.
So what's the big difference here? Well, it all comes down to how we make financial decisions versus how an AI would. Our choices, let's be real, they're often messy. They're clouded by emotion and all sorts of biases. You know, we buy high because of FOMO, we sell low because of panic. An AI, on the other hand, it operates on pure, cold, hard data. It has one single goal: maximize your financial outcome based on the rules you give it.
And the benefits for you, the individual? Whoa, they are absolutely staggering. Imagine a world where you never ever make a trade based on fear, where all your debt, your mortgage, your car loan, your credit cards is constantly being tweaked and optimized for the lowest possible interest rates. Loan approvals? Instant. Your budget, it adjusts in real time to your life. And your long-term savings would be maximized with like mathematical certainty.
Okay, so we've seen how AI could totally streamline our individual finances. Now, let's zoom out a bit. Let's scale that up to the corporate level. What happens when entire companies start applying the same ruthless logic to everything they do? And this brings us to this idea called algorithmic management. Look, this is way beyond just automating a few simple tasks. We're talking about AI making the huge, critical decisions. It's analyzing massive data sets to decide who to hire, how to allocate resources across a global supply chain, and even what the company's long-term strategy should be. In a world like this, the traditional C-suite, it could become totally obsolete.
And listen, this isn't just some sci-fi fantasy. We can already see the seeds of this today. Take a look at the US-based hedge fund Bridgewater Associates. They run on these principles of radical transparency, where pretty much every meeting is recorded and employees are constantly rated on all these data points. It's a real-world attempt to strip human bias and emotion out of corporate decisions, a clear step towards algorithmic management.
This hypothetical quote just nails the potential outcome perfectly. An AI CEO would be completely immune to things like tradition, personal loyalty, or office politics. Its orders would be brutally logical. If the data shows that the human board of directors is an inefficient asset, then the conclusion is simple, isn't it? They're fired. All right, so we've got AI running our lives, AI running companies. Now for the final leap. What happens when all of these perfectly rational AI agents start interacting with each other in one single, massive global market? Well, the most obvious result would probably be this incredible stability. You can see it in this hypothetical chart. A market driven entirely by rational models and perfect information would just smooth out. The wild, sentiment-driven swings that we see in today's markets would pretty much disappear. The market would become predictable, efficient, but you gotta ask, at what cost? And again, this isn't some far-off future. It's really just the logical next step from what we already have with high-frequency trading. Right now, in the US markets, the huge majority of stock trades are already being executed by algorithms. These systems are working at speeds we can't even comprehend, making decisions in millionths of a second. But that incredible speed hides a terrifying fragility. See, on May 6, 2010, the market went completely haywire. Competing algorithms got trapped in this bizarre feedback loop, and they just started selling to each other at a terrifying rate. The Dow plunged almost 1,000 points. $1 trillion of value just vanished in minutes. And then, just as suddenly, the market snapped back. The whole nightmare, from the crash to the recovery, took just 36 minutes. It was a terrifying glimpse of how our automated systems can create a kind of chaos that is all their own. So,
The flash crash really showed us a critical weak spot in this whole pursuit of a perfectly efficient economy. Yeah, it might be stable, but it could also be incredibly fragile. And this brings up a much deeper question. In our quest for perfect rationality, what essential human qualities are we sacrificing? What's the ghost in this perfectly oiled machine?
So, I want to ask you a really weird question. It kind of goes against everything we've been talking about. What is the economic value of a bad idea, of a mistake, of a totally irrational decision? I mean, it sounds like nothing, right? It's just waste, inefficiency. But what if it isn't?
So let's put these two systems side by side one last time. Over here, you have the AI-driven system. It's efficient, it's stable, it's rational. And over here, you have our current human system. It's messy, it's emotional, and it's full of errors. But what if there's a hidden strength inside all that messiness?
And this, right here, is the truly surprising insight. Our greatest flaws might actually be our greatest economic assets. I mean, think about it. No rational algorithm working off existing data would have ever funded a rocket company when governments already had a monopoly on space. No perfectly efficient system would pour billions into some risky new tech with no immediate use. Human irrationality, our gut feelings, those crazy leaps of faith we take, those are the engines of breakthrough innovation.
So that leaves us with this final massive question. In building this perfectly rational economic world, a world free of human error, do we risk creating a world that is perfectly stagnant? A world that's optimized for today, but has no way to invent tomorrow? If we get rid of all the inefficiency, do we also get rid of the random sparks of genius that actually push humanity forward? It's definitely something to think about.